Good day, everyone. Today is Saturday. In this Monday to Friday, because I'm busy, and I will do a market review on Tuesday. So Tuesday is 27th February 2024, and I will break down the charts to see where you should execute and which how to see the market bias. So right now, from March on, I will share my teaching on YouTube. This will not be the journal of what I did last time. This teaching will be shared on YouTube on public if you willing to sit down and listen to what I teach. And I hope in the next videos or more video I created, you will learn something from it. The reasons I doing this is because if I do market review, when I teach people, then I will also remind of myself I should aware of this market condition, or I will reduce the mistake I made, while it also give me I would think back, increase my uh, it also increase my memory when I want to look back at the day that what did I do with the YouTube channel. I would remember what I just did, while you can also learn from my mistake or what you should be looking for. This trading teaching is based on the ICT, Inner Circle Trader. You could also go to his YouTube channels to learn about the trading strategy. So let's kick starts of the Tuesday 27th February market review. So right now in daily charts, there are fair value gaps, and previously in Friday, the market has already swept the buy side liquidity here. In this way, the market is more consolidating, as you need to go into the 15-minute or 1 hour to see the setup on this week. If the daily is consolidating, it probably is time based. When I trade indices, I would wait until 8:30 New York opening times, and I will trade on 9:50, starting from 9:50 macro time to 11 a.m. New York time. In between that time, I will find the setup, because if time based, usually the setup will be formed during that time. So right now you should be more patient. If you know what the market is going for, you will be more patient and wait for the setup. You will not rush into the executions. Because the market may not just give you one entry, but a multi-entry, so you do not need to be worried about. Back to daily charts, there are a fair value gaps here. Remember, if there is a volume imbalance, you should also include the volume imbalance inside the fair value gap. As daily in Tuesday, my bias is I would predict the markets to go rebalance the fair value gaps, or if the market is showing bearish, means if you take out the low of the Wednesday 21 February. So my first target is predicting to rebalance the fair value gap first, and in the next day I will see how does the market react during the New York opening time. So let's go into 1 hour chart. In 1 hour chart, the market from the starting New York opening time, the market rallies higher, and my eyes it was on the buy side liquidity, the equal highs resting below, and there are also equal low on the Sunday. There's three of the equal low. The market right now is consolidating, and I am waiting for the market to sweep one of the liquidity and go shorts into the fair value gap. But this week the market is consolidating, so you need to go into time base 1 hour 50 minutes to find the buyers. In 1 hour, there are just the buy side liquidity and sell side liquidity for the markets to target on. So I will just move to 15-minute charts. In 15-minute charts, I've drawn the new opening time at the end of the New York end times. What do you see in this market? My eyes was this. Now my eyes is the market structure shift. Did you see the market structure shift during 8:30? There is a high, low, the swing low, and high, and a lower low. It creates a displacement, a very strong displacement during the almost the New York 8:30 a.m. So if the market show this is a market structure shift. So when you see the market structure shift, you do not need to. If you see the market shift during the 8:30 a.m. New York time, and you see the buy side liquidity at equal high, you may expecting the markets to sweep the buy stop liquidity and goes lower. But right now, during 8:30, the market has already show you a market structure shift in 15 minutes. With a higher time frame, the bias or the direction will be more clear. And if you see any market structure shift in 5 minutes or 3 minutes or 1 minute, this is not accurate, or the bias may not go into your direction. You should find the liquidity or market structure shift in the higher time frame, such as if you don't see any bias in a long or short in 1 day daily chart, you should go into 1 hour or 50 minutes to determine where does the markets wants to go based on the time 8:30 a.m. to 10 a.m. So right now Tuesday is very consolidating. Although the market shows you the market structure shift, and you waited until you want to trade during 9:50. Example, you want to trade on the 9:50 macro time to 11. You are finding a setup, but these days the market did not give you any setup. The setup is formed during the New York PM sessions. It is when the market has swept the equal lows and it goes higher. This will be the entry. Now I will talk about more about the higher time frame. Why higher time frame is important when you determine the bias for shorts and long. The market doesn't necessarily to sweep the buy stops. When you see there's also the difference between breaker and market structure shift. But right now, in Tuesday, it shows a market structure shift. Breaker and market structure shift is almost the same, it's identical. But there are slightly different in breaker. Breaker will be more stronger. It tells you that the market will not need to rebalance the fair value gaps. It rebalance the fair value gap of the market structure shift. Right now, in 15 minutes, the market has shown a market structure shift. So there's a bearish fair value gap. You could enter at the 15-minute fair value gaps if you want to do a short trading, a short execution. Now I will show you after PM session where does the setup form. So usually, if PM session in ICT will teach you to look after 1:30 a.m. and it also have a silver bullet time during 2 to 3 p.m. New York time. You could find the setup during that time. So now I will go to 5 minutes, 3 minutes, and 1 minute to find the setup during PM session. In 5-minute charts, the market has swept the equal lows where the sell stops I draw below. So in PM session, the market has already swept the sell liquidity and it rarely higher. It breaks the swing high, the light bulb I put. There's a swing high, the candle to left, lower to left, and lower to right. And it creates a swing, the wick, the high, and it also break the green candle is the breaker. So in breaker, it's a strong confidence that the market will be respecting in this breaker and it goes higher to take out the swing high or the buy side liquidity. So now I will go to 3-minute chart. In 3-minute charts, you would not see any fair value gaps created when the breaker is break. It breaks the swing high, and I do not see any fair value gap in 3 minutes. There's also an order block. Order block means the market would not try to go lower. Now I will go into 1-minute charts, and I also draw the 1:30 p.m. New York time, where you should start your trading. So let's go to 1-minute charts. Now in 1-minute charts, when this breaker is the market structure shift, the breaker has been break, you could have a strong confidence that the market will not go back to a lower fair value gaps, the bullish fair value gaps, because this is a bullish market structure shift and a breaker. So you could know that the market will be staying in the breaker without going any lower to fill the discount bullish fair value gap. Now there is only two setup you could enter, which is the 1:47, and if you miss the setup, there are also another one in 1:52 minutes. This I would enter in during this time because there is a breaker and which I draw the gap with the candle, the green candle, and this is a breaker. My setup, if I want, I would choose this instead of this one. The breaker is a more strong confidence to me that the market is going bullish, and I would enter right here instead of here. Unless that you say you miss the breaker entry, you could enter during 2 o'clock silver bullet time. There are also one more entry here. You could enter here, and this is the bullish fair value gaps. Your target will be the buy side liquidity on the swing high here, the buy side liquidity. This is your first target. Buy stops. You can enter here. That's why I have shown you the difference of market structure shift and a market structure shift with breaker. You can understand the difference. Breaker is more stronger than a market structure shift. When you see a market structure shift, it means that the market may want to go back into the lower fair value gap, and I will explain this in Friday. Market review of Friday. Now the breaker means that the market has swept one of the liquidity, but in market structure shift you do not need to sweep liquidity before you go into that direction. Market structure shift is you see that the market has picked up one of the buy side and it shows a strong displacement. Okay, I will explain later. So today will be the market review of Tuesday, 27 February, and I will talk to you soon. Take care.